Hello everyone, welcome to Unit of Technical Analysis. We would be covering basics of technical analysis for beginners, and today's topic would be Bollinger Band. Now, probably I didn't wanted to take this immediately, but there was a huge amount of request from last 2 days. I mean, how we are able to track these points, because there were two trades which have been given. One was on 6th of July, around 12 noon, and it was like, okay, you'll be able to get 125 to 150 points expected, big move, right? This was there into the concession zone, and concession zone is more of related to Bollinger Band. How to find out this congestion zones and how to find out this 120 150 points or maybe more points, I'll tell you specifically. Let's go to the basic part on that, which is Bollinger Band. Right now, let's do one thing. Let's start by drawing a Bollinger Band. So you go into indicators and you type either Bollinger Band or BB. Okay, either of them, whatever is suitable for you. So this is what a Bollinger Band looks like. Let's go to the terminologies, which is there. Length is the standard one. This is 20, which is being used, and multiple is 2. I'll tell you about this also. Now, what is there in the Bollinger Band? First is you have a median. So I'll darken this median. You have an upper band. I'll darken this also, probably a higher one. And you have a lower band, right? 1, 2, 3. And plot bars maybe just a bit highlighted, easier for us to understand, right? Right. So this is what a Bollinger Band looks like. I'll remove these volumes, not required. So take it over here. Right. Now, what do you see in a Bollinger Band? You first of all see this red line. This red line is nothing but just a simple moving average. Right. That's it. Very simple as that. This red line is a simple moving average, and the blue lines that you see on the top and on the bottom. So this is the upper band and this is the lower band, right? The upper band and the lower band are standard deviations which are there, right? How you can change that? Probably again in the settings, I'll just inform you, right? So the median that we saw, the red line, that is our simple moving average, right? The upper band, which is on the top side, and the lower band, which is there on the bottom side, right? Those together is being called as a Bollinger Band, right? And the length of that is 20. So that means 20 simple moving average. If you are on the weekly part, daily part, monthly part, on the basis of what candles or what time frame you are using, on the basis of that, this length will vary. Vary means it would be either days or weeks, months, or maybe that many minutes. If you are in a time frame of 15 minutes, probably this would be on a 15-minute time frame, right? So this is how it is. Very simple to understand, basically, right? Now there are various aspects which are related to Bollinger Band, right? As I told you about, the simple moving average and the standard deviation which is there, right? I just forgot to tell you about one important thing. Yes, so this multiple is 2. So 2 is the standard deviation which is being used. This is standard, we'll keep it as it is, or if you want to use 36, you can use that also. Doesn't matter much as especially. I have done back testing for that, and there's not much change as especially on that part, right? Yep. Now, basically, Bollinger Band is not being used alone. It generally is being used with other indicators like RSI, MACD, because this is just a band. It doesn't give any kind of indication on its own, or you cannot have a strategy on its own as per the theory, right? So this is the first part. I told you about the bands also. Now, what happens generally? Let's see. So this is standard deviation. So as per standard deviation, what you see is the band keeps on either squeezing or it keeps on expanding. Now, when it expands, this is generally high volatility, right? First of all, if you see, the band was almost being closed within a specific distance, and after that, when there was a high volatility, the band also started increasing. So when you see a larger band which is there, it means there is high volatility in that time frame, right? When you see a lower band, for example, this is a lower band, right? It is not changing as much basically. So this is like you don't see that kind of volatility. Here again, if you see over in this part, I'll just zoom it. So this is low volatility, wherein the price is more of in a range bound, right? Now, one more specific thing about this Bollinger Band is it mostly covers 90% of the price. So 90% of the price would be either in the bottom part or in the top part or within the Bollinger Band. You'd be finding only 10% or maybe even 5% of the price which is just going out of the Bollinger Band, right? Now, when you find that the Bollinger Band is on the upper band, sorry, the price is there on the upper band, right? It generally is being defined as being bullish. So when you see that it is on the top side, it is bullish. When you see that it is on the top side, this is bullish. When you see it is in the top side, this is bullish. But when it is coming at the bottom part, this is being considered as bearish. When you see it at the bottom part, this is being considered as bearish. When you see price more of at the bottom part, this has been considered as bearish, right? See, again you see at the bottom part, so this is more of bearish. So when the prices start reaching at the bottom level, this is called as bearish. I mean, like you can say that the trend is more of bearish rather than being bullish, right? So these are some significant points which are there pertaining to the Bollinger Band, right? Where it has the upper band, the lower band, and you have the middle one. The middle one is generally a median or a standard moving average, either of them. For the Bollinger Band, this has been specifically called as medium. Now, there are various strategies which are related to this Bollinger Band that we can work out of, right? Of course, I'll tell you my favorite also and how to calculate the points. But before that, right, what happens is generally when the price touches or goes beyond the bottom part and after that it starts rising up, it has been said that you can generally take a trade in the upward direction, right? For example, if you see, yes, this line is been touching, this candle is again been touching, this candle is not been touching. After that, the reversal candle that you see, which is on the reversal part, this is not touching. So probably you'll be able to take a trade over here, right? So this is again in confirmation with our Fibonacci that we use. I'll just draw a few of the Fibonacci's, right? So for example, it was touching down, it went up. Right? So taking cognizance of that, probably you will come to know that, okay, fine, this is more of a reversal, and this can be said as a trend of reversal where the price starts moving up, right? Either way, if you take the cognizance in a similar way over here, you'd be finding the same thing, right? So by doing this, probably you'll be able to increase your high probability trades, right? Simple as that, nothing more than that, right? So whenever you think that the trend is changing, you have to wait, let the price go up, and after that give a reversal. Once it has given a reversal, probably you can then trade that. on the basis of Fibonacci levels 1.27 to 1.618 or further if the trend is moving up, right? So same happens at the top part. If you see over here, yes, the price has been moving up. After that, probably it starts moving down, but probably it didn't give that kind of signals. Why? Because the reversal has come down, which is just above this, right? Here again, the same thing happened. It was moving down. It came up, but it didn't give any kind of significant reversal. So nothing like that, especially to trade. Here again, the same thing. It did come up, but probably hadn't come down to that reversal level where from you can trade, right? So again, if you see over here, the price has been generally moving up, right? Over here, if you see, yes, a significant change is there, almost 1, 2, 3, 4, 5 change, 5 days of downside. After that, yes, the Fibonacci gave us a reversal. I know I generally take this example, especially of the all-time high. So again, coming back to the 0.5 level. So 0.5 level, and after that, it starts moving down. So it's like you can use it together with various other tools, various other indicators like RSI, MACD. Here we are using with Fibonacci. Why? Because we know that the reversals are being best known with Fibonacci, especially for levels, because price and time is the most important thing, right? Others are more of indicators. You can give indication from that, but because we need to have the price level and the time which is there, that's why Fibonacci is very important. So going further, as I told you, for the reversals part, definitely this would be helpful. When price is moving above that or probably beyond that, it has to come down again into that. For again example, if you say that yes, fine, it had come down below this price, again went up, and again it started moving up, again went up, probably here you got a trade which was moving up. So this can be a small trade. Again it started moving down, it went up, it didn't go directly, it did come down, take a reversal at 50% level, and after that it started moving up, right? So see the preference which is there, generally it happens in that way. Again, if you see, yes, it went up, it came down, but probably if you see at this levels, right? Right. So there was a bottom, there was a high, and from there it did reverse. Probably you can take a trade over here. But if you see especially, this was 0 level, this was 1 level, and the price did reverse somewhere around from 0.76 level. So here again, it gives you a signal that, okay, fine, you have to close. That's why it's like Bollinger Band has to be used either with Fibonacci, RSI, or MACD, either of them, whatever is comfortable. Right, again over here it went up, gradually it started coming down, no signal was being generated, and again the price started moving down further, right? So these are few of the examples that we are able to see, right? Again price went up, probably it came down, it didn't come down that drastically, but if you see in terms of RSI, MACD, yes, probably you'll be able to find a divergence over here, right? That will be able to help us to find the upward move, right? Or maybe candlesticks, you can use this because this is the morning star followed by bullish divergence. After that you will be able to see that. So you won't be able to trade probably over here, right? Because there was no indication as such, but here specifically that indication is there, right? You, that's why it's very important that you use Bollinger Band with other tools, indicators which are there, right? Here again, if you see no specific signal, probably if this was a signal, it went up, probably didn't cross the high, and it started moving down further. Again over here, especially same thing, went up, came down, and after that it started moving up, right? Again, if you see over here, yes, these are the low points. Here it came down, didn't move up. Here it came down, didn't move up. So at times it is very critical because more of the people have been asking me, subscribers who are there, they have been asking me how to find out whether this is a low or not. So it's very critical. If you know, yes, this is low, how you will be able to know the low? if it crosses below or beyond the Bollinger Band. How will you now come to know that this is a high or not? See, we'll just try to find it out. Here it didn't cross up the Bollinger Band, neither of them. Here again, neither of them. Again, neither of them. It was there, but the closing was within that. Let me just show it to you. Right, the high was not the high, but the closing 15108. 15108 was the high, and the high, or maybe probably the Bollinger Bands which are there. The blue one, which you can see over here, that is 15110.0446. So this closing was not beyond the Bollinger Band, right? Again, same over here. If you see, the closing has been within that. The closing is 15582, and it is like 15572. That is there. So maybe 10 point just above a closing, which is there. So we at times get some odd figures also, but the probability is much more on the higher side. Right? Again, this was up, but probably if you see, yes, it immediately came down and started moving up. So it didn't go much beyond that. Same over here. They come around, and again it started moving gradually within the Bollinger Band. So no such specific moment. Here, if you see, yes, 1, 2, 3 days, it went up. Probably 1 day, 2 day, 3 day, right? 1 day, 2 day, 3 day, it went up. Bearish engulfing, market came down. So when you use this with other indicators like candlestick pattern, RSI, MACD, or even Fibonacci, you will be able to get better results, right? Because we saw this example in terms of candlesticks. Candlesticks probably is the best combination with this together. Of course, Fibonacci is also there, but yes, it depends upon what tools you have been using. See, bottom again got a signal, it went up. Bottom again signal, it went up. Right? Again, it went down, probably came up, went down, again a signal, went up. Right? So we should be able to catch these signals together. Probably using this together with candlesticks, as I told you, this can be really helpful. Again, it didn't go up much beyond the Bollinger Band. Again, not much beyond the Bollinger Band. The one which was there below probably gave us in terms of candlesticks, and it started moving up. Right? I'll just give you a small hint. Probably this has just moved above the Bollinger Band. Right? So just maybe something like that, which you can think from your side, what would be happening next, right? Just a small indication. Probably we'll try to cover this in the few further videos, but at this time, just an indication for you, which I just covered below or above the Bollinger Band, and the closing is also above that, right? So probably you'll see something moving up, and then probably some change of trend, you never know, right? So this is how Bollinger Bands are to be used, right? Apart from that, as I told you, yes, probably reversals would be there, or you can say this as double tops, double bottoms, either of them. In terms of Fibonacci, yes, reversals are there. So definitely these reversals are very helpful. You should be able to understand these reversals and then go on the basis of that, right? Now coming to my most favorite part, which I generally use. I'll tell you the secret, don't worry, right? My most important and favorite part is the squeeze. This is what I use. Now, squeeze is nothing but like a spring action, right? Now, what is a spring action? If you press a spring and try to compress it further, what happens is when you leave the spring after you have compressed it, it just jumps out, right? So same happens with the price also. If the price is been compressed for a specific time period, the more the time period, the more the expansion which is there, correct? So you have compressed this price, and after that what happens is the price just pops up, and it starts moving up, right? So this is there especially after a squeeze, right? So here again, yes, you can say this more of a squeeze, or this was a squeeze, right? You see there was a bulge, or maybe the expansion of the Bollinger Band, or a large band. Then the band got smaller, or maybe it was squeezed or shrink band, either of them, whatever you try to call it, it just pops across. Let's try to see something for the bear cycle. Now you can see this is a beautiful example which has been going on, right? The price which was there, probably this was more of into a squeezed format, right? Squeezed format compared to rest of the part. The price has been moving volatile, being volatile, and after that it just got squeezed across, right? It tried to move down, went up, and from there it started moving down. Now here it's not necessary that every time you'll be getting that kind of example where the price has been moving up, but like going to the top, coming down, going to the top, coming down, again going to the top and coming down, right? So here if you see or use this with a rising wedge, probably you'll come to know that okay, fine, this is the top, and from there it will be coming down, right? Let's see some more examples, right? Again here it went up, came down, came down, went up, right? Tried going down, came up, again tried going down, came up, came up, right? So it was gradually over the Bollinger Band. So this is a downtrend, and after that it started moving inside. See again, it didn't just go up, it came down. It formed more like a double bottom over here, and then after that it went up. So double tops, double bottoms, more of, or maybe reversals in terms of Fibonacci. Definitely you'll be able to see that in Bollinger Band. And Bollinger Band, as I told you, has to be used across with other tools. Again, price has been more of on the top side, right? So this says that okay, fine, the trend is still moving up until unless it starts moving down. Just like you see over here, it started coming down. Till this part, yes, probably it was on the top part. It was still on the top, it was still on the top, it was still on the top, it was still on the, but it didn't even touch the moving average. So it was just above the moving average. Here it crossed the moving average, came back, started moving down, right? So probably this is one more strategy that you will be able to use. Touching the Bollinger Band, coming up, taking a support at the moving average, or maybe the median which is there, and then started moving down, moving up, right? So if it crosses down, takes a support on the top side, and if the moving average is also trending upwards, it is again moving up, right? So simple as that, very simple to understand. See here again, the price did cross down. First indication was a bearish engulfing. The price did come down. Again, it tried to take a support at the top, but didn't cross. It came down. Again, it tried to move up. And after this, this was more of a resistance at the median. So you can definitely take trades over here when you know that it is not crossing beyond that. So gradually after that, it started moving down, down, down. Again, tried to cross the simple moving average, but not possible, came down, right? Here it did cross, took a support at the moving average, and there further it was moving up, up. How did he give an indication? It gave an indication where it just crossed above the price or the Bollinger Band. So it is again, you should be very careful that okay, fine, the price may come down, right? Here again, it tried to take a support, but again started moving up, took a support, again started moving up, took a support, again started moving up, went down, took a support, went up, again being on the upper band of the Bollinger Band, it is bullish. So bullish has been considered upwards. Price started moving up beyond the Bollinger Band, upper Bollinger Band, and it started reversing. Again, same thing. Here it didn't cross the moving average. Till that time, it was very much on a positive trend because your trend was also positive. It crossed over here, again gave me a signal, gave me a resistance at the median, and from there it started moving up, right? So simple strategies are upward side Bollinger Band if it starts crossing up, and where you get confirmations in terms of candlesticks or RSI or maybe MACD or more of in terms of Fibonacci, definitely you can go for trades on the basis of that. So always take confirmation. Second is when you know it is crossing beyond the simple moving average, takes a resistance over there and starts moving down, you can take a trade for downward. And if you find a trade which is like the price is just touching somewhere around nearer to the Bollinger Band, it crosses just above the median line, takes a support over here and then starts moving up, so probably you can take a trade over here, right? Simple, very simple. Yes, I'll be coming to our point. I took this trade, which was quite a congestion, big move around 125, 150 points. Now see, for unit of technical analysis, it is very simple part. If anything, in terms of points, in terms of price, if you are able to measure it, very simple. I always try to measure everything in terms of time, and second is in terms of price, because we are able to trade only on the basis of these two things. One is timing, because your entry timing should be very good, your exit timing should be very good, and second term is your price at which you are buying and at the price at which you are selling, right? So time and price is very important. You should always trade only on the basis of these two things, right? Here also we try to find out points. Now points is 125 points, 150 points. Second thing that we need to know is time, right? So what I'll do is I'll just go to a smaller time frame, which is 15 minutes. I'm just taking one example over here, and then I'll be able to help you further, right? So 15 minutes time frame, and this was there on 6th of July. 6th of July, it is 12 o'clock. So I'll go to 6th of July, 12 o'clock. So this is 5th. This is 6, 12 o'clock. So this was 12, right? What happened over here is, first of all, the price was moving up. And after that, it was taking a support at what? It was taking a support at my simple moving average, which is again the median, right? So it took a support over here, and from here my target would be either to move on the top side, right? So what I do is, once I know for the time frame, right, I try to measure 4 points also. For example, from my previous history or maybe from previous backtesting, I have come to know about one thing is, if the price takes a support in 15 minutes time frame at the simple moving average, it generally gives me 125 to 50, 150 points on the upside. Let's try to measure this. For example, it went down, right? Again, if I see in terms of course, for this very critical, I need to again have a confirmation on the basis of Fibonacci. Once you have that, things become much more easier. So what I'll do is, I'll take my price range, I'll go to the top part. So this is my top, and I'll come to the bottom part, right? And what I'm getting is 149 points. 149 points is from the bottom part. Let me just find the exact. So I'll take the exact prices also. So low over here is 15,852.55, 852.55, and the high was 15,998.95, right? So what I get is exactly 146 point, right? And what did we mention over here is 125 points, which was there at 12.8. So 12.8 was maybe at this point, or maybe because this is 12, and after that from 12 to 12.15, this is the candle which has been formed, right? Now, if I try to zoom it across, it has just taking a support at this level. That is the first part. And second, again, it has taken a support at this level, right? Maybe why not this point? Why? Because this was a range which was been formed. So that's why this candle was not been taken. Again, try to know this part, very important. This was my low. This was my first leg which was been formed. So from the low to the high, this is my first leg which has been formed, and from there I get a reversal. So if the candle opens over here, it goes down, gives me a retracement at 0.236 level, and after that it starts moving up, right? Very simple, nothing more than that, right? We'll try to see few more examples, right? For example, from here it goes up, it comes back from here. Now this is not specific anything, or maybe I'm not trying to find anything on this part. I'm just trying to show you something, right? So again, if you see in terms of reversal, yes, this was a bottom which was there. After that, the price did go up. Again, it came back, right? It crossed, again it came back. When it came back again in the time frame which is there for 15 minutes, I got Humber 123 points to the top part. So I'll only trade for 120, 130, 150 points, not more than that. Because I know after this, probably I'll be getting a reversal, right? Let's try to find out few more examples, right? So over here, it started moving up, it came back, it took support. So probably this was my support point. So my high was here 15790.7, 90.7, and my low over here was 15634.8, 634.8, right? So simple thing, I know probably it has returned from that, but it has not taken a support at the moving average part. Here probably it has taken a support, but still my moving average was more of into a downtrend. It was not into an uptrend, right? Here onwards, if you see, my median level is 15695, and over here it changes to above that. See the median over here, the median values have been given. At this my median was or the red line which is there 15636, and over here it comes to 615,640. Over here if I see, yes, it was in a downtrend, so trend was negative over here as per the moving average. I hope you are aware about moving average, and we have already covered this in the basics part, basics of technical analysis for beginners, moving average. So probably you can just go back into the playlist for basics of technical analysis for beginners and try to find over there. You'll be finding moving average and how you use the trend line or maybe the moving average for that. So trend is negative, so that's why you're not taking trades over here. Why? Because every time my moving average is coming down, 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 it is further moving down. But at this point, if you see, it makes that change, right? If you see over here, it is 636.7 and it changes. to a positive part. So when it changes to a positive part, that is the first indication that has been given. And second is I get a support of price at this part. So there is double confirmation. Third is there is also a squeeze which is being seen, right? So there are different aspects that we need to see, confirm, and then always go for the high probability trades. We are not going for anywhere on the basis of only one indication or something like that, but this is on the basis of first is Bollinger Band, second is we are considering the moving average, third is we are considering the price taking a support, and we know how many points we have to get, right? This is again a good example. Prices touched up, went down, it gave, it was not a resistance, this was a resistance. Probably it again went up, right? So after coming down, probably this was, I shouldn't be taking this. I, because yes, oh, sorry, price top and just going to the bottom part. Here we see that the price has gone beyond that, so probably not an accurate one to be traded. But if it takes a support somewhere around that part, it will be much more easier to understand. Here we are not getting that kind of indication, right? I'm not just trying to show that, okay, fine, this has been happening something around that part. But yes, if you see from this part, maybe probably going till this part, it has come down after taking that resistance. But if you see over here, yes, probably if it has taken a support here and next day, I'm not very sure how this would be happening. So if this is going beyond, probably I won't be taking that trade because this is not giving me a high probability trade. 844. And after that, the bottom has been 736.05. So again, it gives somewhere around 107 points. Maybe a good trade, but not very approximate because it didn't give me that exact points. If we had taken a support at this level, probably if this candle has not given up and started moving down, it would have been a good trade for me. Right? Again, it started moving up. From here, it went up, went down. So probably from here to here, it would be a trade. Why? Because this is a kind of reversal for me. And this reversal exactly come down to 0.5. So this is again a good trade. I will try to find out the points. Right. So if I find out the high, it was 860. And the low over here was 743.7. Right. So from this bottom to the top, I get somewhere around 116 points. Right. It went up, closed up. From here again, if I take a trade, probably I'll be finding this again coming down to that points. Maybe again, if you see taking a support at this point and going to the top, or maybe from here onwards. Why? Because this has given me a change of trend. 90 points. Why? Because this has become positive from here onwards, not before that. Before that, yes, the moving average was more of into a downtrend, right? Let's take few more examples. right? This is a good squeeze, right? And after this good squeeze, I find a high, a low, and a reversal. Let me check down how is the reversal. Right? So after this squeeze, basically I'm getting a reversal which is just nearer to this 0.5 level. Right? So from there, again resistance at this. Why? Because my moving average has started moving down. Right? I don't take this trade. Probably I can consider this also, but this has given me a new range because after that it has come down. Probably if I trade over here, my stop loss would be hit. If I trade over here, I'll be able to get certain points. So I'll be going for the high. Not Bollinger Band. I'm so sorry. Right, somewhere around 150 points. Let's not go approximately. Let's go approximately rather than taking accurate points. But yes, we saw certain examples. Probably one example, two example, three example, four example, five example, six, seven different examples. Somewhere there in downtrend, somewhere there in uptrend. But if you go as per the strategy, especially there for 15 minutes time frame, you'd be getting somewhere around points between 120 to 150 approximately, because it is like 150 over here. This is 116, 107, 92, 155, 123, 146. So if I take an average of all these things, it will be coming between 120 to 150. That's why I've considered that. Right? Simple as that. Next time probably we'll try to cover a few more examples, and definitely you need to do back testing for all the time frames, which is there for 30 minutes, 45 minutes, or maybe for 1 hour, 2 hours, 4 hours, for daily also. Daily also you get really good candles. I'll show you something for daily. Right? See, last daily that was there for us. Let's remove all these things. Give me 1 minute. Right? So last daily was, right, the price did come down. It went beyond that, probably gave us a double bottom, gave me a retracement, and from here it went up. So price for me moves from daily, it gives me somewhere around 1,000 points. Right? And again, if I see from this point, probably, oh, I'm taking Fibonacci every time. Probably more used to. So I've been left out with somewhere around 1,000 points. Right? Again, if you want to see the number of days, probably you can take that also. And we did consider this number of days also. Let me just take some examples. Yes. So this was on 5th of July, maybe a few days back, where we had just given measured moves. Measured moves would be one of the chapters for unit of technical analysis. We haven't covered that, but probably I'll be taking measured moves because I wanted some live examples. On the basis of that, I'll be able to give some information for live trades. Right? So from year to year, it was 105 points. From this point to top, if we consider 1058.1 point exactly, this should be coming to a level of 16 to 41. That is the first part. And second thing is, as per the candles which are there, it was coming to almost 22 days, 16 candles. So we have considered how many? 16 candles, and this 16th candle comes on somewhere around 11th of June. Maybe 1-2 days plus minus here there. This is what I see. Right? And one more thing specifically which was there, because we are talking about those things also, I just wanted to talk about that part also. Rising wedge. No, that has been. I'll just show it to you. Nifty. Yeah. So I consider from the bottom it will be going up, and we have seen like 1-2 days of gap up opening, which probably I see we have got 1, 2, 3, 4 days of gap up opening, which was especially there during the all-time high. This is as per history, and this was there on 19th of October when we got an all-time high. So probably it may happen that okay, we may get some kind of candles. Why? Because this is the first indication. Second indication is on the Bollinger Band, you are going somewhere around just above the Bollinger Band. So if something is going outside of the Bollinger Band, probably it should come back. And if it comes back from here, we may get somewhere around 1,000, 2,000, 3,000 points, or maybe more than that. But as per my understanding, yeah. So I think that if it reverses probably somewhere around from this point, which comes to be 0.76 level of the entire range, which is 16,230, it may come down, and this may come down to almost around 1,000, 3,000 points approximately. This is what my wildly guess is as such. Personally, I may be wrong, but let's see how it happens and how it goes further on that part, right? So my request is, first of all, please do subscribe to our Telegram channel, which is Unit of Technical Analysis, and we are also present on YouTube. The same channel is there. There are different playlists for that part, and do watch the playlist and get back to us if you have any kind of doubts. Please do write in the comments. If you like the videos, also place your comments on that flag, and please do like the videos also. Thank you so much. We'll meet you next time again. Take care.